Picture a world where the choices you make today about how you invest your money decide whether in the next decade you'll be among those who prosper or those who struggle to get by. Imagine that there exists a metal that almost nobody is talking about, a metal that literally makes the energy revolution possible that everyone says they support, but that simultaneously is scarce in ways that nobody is completely prepared to understand. This is the moment when that metal, silver, is about to enter a phase of its history where its value will not be determined by speculation or by collectors, but by an irrefutable reality. The demand that will be required by every solar panel that gets installed, every electric vehicle that gets manufactured, and every artificial intelligence technology that requires world-class semiconductors. If the analysis we're going to do together over the next few minutes helps you see the market from a different angle and understand what's really at stake in the transition toward clean energy, I ask that you subscribe to this channel now. This isn't just about following content. It's about being part of a community that sees things before the rest of the market does. So subscribe right now, because what's coming is a narrative that will change how you think about silver, green technology, and the opportunities that are forming in real time. Remember that this content is educational and does not constitute financial advice. Its purpose is to help you think more clearly about your financial and investment decisions. Let me start with a truth that the press reports are barely beginning to mention. During the last 5 years, the global solar industry has experienced unprecedented growth. In 2023 alone, China installed 216 gigawatts of new solar capacity, which represents an increase of more than 140% year over year. When you compare that number with historical context, you understand that we're talking about a complete regime change in how energy is produced on the planet. But here's where the story becomes interesting, because within each one of those solar panels that gets installed on rooftops, farms, and industrial scale generation plants, there is a component that requires increasingly larger quantities of a very specific metal. That metal is silver. Now, when I talk about silver in this context, I'm not talking about the symbol of luxury or investment that many people know. I'm talking about a critical industrial material whose electronic and thermal properties make it practically irreplaceable in cutting-edge technological applications. Silver has electrical conductivity superior to any other known metal. Its capacity to transfer energy without losses is so extraordinary that literally there is no synthetic alternative that has been capable of replacing it at commercial scale. In photovoltaic cells specifically, silver acts as a front conductive layer that captures the electrons released by sunlight and transports them to the electrical circuit of the panel. Without that layer of silver, the solar panel wouldn't generate electricity effectively, period. But here's the problem that nobody wants to talk about openly. In 2024, industrial demand for silver reached a record level of 680 million ounces. In 2025, analysts expect this figure to keep rising, particularly because the solar industry is migrating toward next-generation technologies that require even more silver per cell. The new TOPCon and HJT type cells, which are more efficient technologies than earlier ones, have a higher silver loading. This means that as manufacturers try to make panels more efficient, they need more precious metal. It's a brilliant economic paradox. The more we advance technologically, the more silver we need. Now let's analyze the other side of the equation. Global silver production in 2024 increased by just 2%, reaching 844 million ounces. This is minuscule growth compared to the increase in demand that we're seeing. Here's where the math becomes urgent. If demand grows in high single-digit percentages and production barely grows in low single digits, and if these numbers maintain this trajectory over the next 3 years, you end up with something that in market jargon is called a persistent structural deficit. The global silver market is projecting a deficit of between 115 to 118 million ounces in 2025. This isn't a small one-year deficit. This is the fifth consecutive year in which silver demand has exceeded available supply. Think about that. For 5 years straight, the world has been demanding more silver than it can produce. What that means is that global inventories are being depleted. The reserves that refiners, traders, and industrial users accumulated over decades are being consumed in response to this pressure. Why is it so difficult to increase silver production? Here's the critical factor that most analyses ignore. Around 80% of the silver produced in the world is a byproduct of mining other metals. When mines extract copper, lead, zinc, and gold, silver comes along with those minerals. Mining companies can't simply decide to extract more silver. They would have to significantly expand their base metal mining operations, which requires massive capital investment, regulatory permits that can take years to obtain, environmental studies, dialogue with local communities, and all of this in a context where the prices of those base metals aren't necessarily incentivizing that expansion. When you look at the copper, lead, and zinc markets, you see that prices have been under relative pressure. That discourages miners from expanding production. A miner asks themselves, why am I going to spend $2 billion expanding my mining operation if the copper I expect to sell might not justify that investment? Meanwhile, silver remains trapped in the underground economy of the global mining system, unable to be extracted in the quantities necessary to satisfy the demand that's growing exponentially. This is the situation we find ourselves in 2025. We have an unprecedented global energy transition that requires quantities of silver never before demanded. We have a supply that's structurally limited. And we have a pricing system that hasn't yet completely reacted to this reality. Silver prices certainly move, but not at the pace that the physics of supply and demand would suggest they should move. Now, let me take you specifically to China, which is the epicenter of this transformation. China produces approximately 30% of the world's silver. China also installs the majority of the world's solar panels. More than half of the global solar capacity being added each year is being installed in China. The Chinese government has launched massive subsidies for the solar industry. In 2023, Beijing announced a $10 billion subsidy package specifically directed at solar panel manufacturers. The stated purpose was to boost solar energy adoption throughout the Chinese economy. What's the result of this? First, solar panel prices fell dramatically. When prices fall, more solar energy projects become economically viable. You'll see developers building solar plants in places where 2 years ago they wouldn't have because there wasn't enough economic return. Now, with cheaper panels, the equation changed. Second, even though panel prices dropped, the amount of silver contained in those panels didn't decrease, or in fact, in some cases, increased, because manufacturers are using more efficient technologies. This is critical. The Chinese solar industry is trying to solve a paradox. Everyone wants more efficient panels, but more efficient panels require more silver. Manufacturers are desperately seeking ways to reduce silver content in their cells. It's called thrifting, which is a technical term meaning using less of an input without sacrificing the quality or performance of the final product. Researchers are experimenting with alternative coatings, different cell architectures, and more optimized manufacturing processes. But here's the brutal reality. So far, all those efforts have achieved little, not because engineers aren't brilliant, but because silver is simply extraordinarily effective at what it does. When you have a material that's been optimized for decades in semiconductor, photovoltaic, and electronics applications, finding a true substitute isn't trivial. It's practically impossible in the timeframes we operate within. So what's happening in the United States? The United States is also in an aggressive race toward renewable energy. The U.S. administration has implemented massive incentives through the Inflation Reduction Act. The federal government is subsidizing the manufacturing of solar panels, lithium batteries for electric vehicles, and clean technology components. These subsidies aren't small. We're talking about tens of billions of dollars. The impact this has is that green technology manufacturers are trying to establish domestic supply chains in the United States to take advantage of those subsidies and avoid the complications of international trade with China. But here's where you see the silver problem manifesting itself very concretely. The U.S. renewable energy industry is growing at an accelerated pace. Solar installations are rising each year. Solar panel manufacturers are building manufacturing plants in the United States. But all that new manufacturing capacity needs access to refined silver. And silver isn't refined in significant quantities in the United States. The United States doesn't have a primary silver refinery. Almost all the silver that the U.S. uses comes from other countries, primarily from Mexico, Peru, and Chile. This creates a geographic bottleneck. You have demand growing in the United States, but the supply you need to serve that demand has to travel thousands of miles, go through refining, pass through entry points into the U.S. supply chain. Any disruption in that system, any congestion, creates price pressure. Now consider Europe. Europe is also committed to the energy transition. The set of regulations known as the European Union's Green Deal establishes very aggressive targets for decarbonizing the European economy. This means solar panels, it means offshore wind farms, it means all kinds of renewable energy technology. The European continent is also experiencing an increase in silver demand for these applications. But Europe has its own geographic challenge. Much of primary silver mining in the world is in Latin America. Europe is a net consumer of silver. Almost all the silver Europe uses, it imports. Do you see the pattern? You have three major economies, China, United States, Europe, all competing for the same global silver. All have ambitious clean energy goals. All are using public policy incentives to accelerate the transition. And all are doing it at the same time. In a market where supply is inelastic, this is the perfect recipe for price pressure. But there's more. We're not just talking about solar panels. We're also talking about electric vehicles. Here's where the silver story becomes even more urgent. A modern electric vehicle contains significantly more silver than a car with an internal combustion engine. In conventional vehicles, between 15 and 28 grams of silver are used per vehicle. In hybrid vehicles, between 18 and 34 grams. But in battery electric vehicles, we're talking about between 25 and 50 grams of silver per vehicle. That's more than double. Why does an electric vehicle need more silver? Because it has far more electronic components. You have complex power electronics, thermal management systems, communication networks between components, advanced safety circuits. All these systems require silver for their electrical connections. Moreover, some of the most recent developments in electric vehicle battery technology are specifically increasing silver use. Samsung recently announced that it's developing solid-state batteries for electric vehicles that incorporate a layer composed of silver and carbon. These batteries promise higher energy densities, faster charging times, and longer lifespan than conventional lithium-ion batteries. If this technology commercializes at scale, it could mean a dramatic increase in silver demand for automotive applications. Analysts are speculating that a typical solid-state battery could require up to 1 kilogram of silver per battery pack. Now let's look at electric vehicle numbers. In 2023, the United States sold over 1 million electric vehicles for the first time. This represented a 52% increase year over year. Global electric vehicle sales are growing at an accelerated pace. It's projected that in 2025, more than 17 million units will be sold. The International Energy Agency predicts that by 2035, every other automobile sold globally will be electric. Think about what that means for silver. If last year 10 million electric vehicles were sold, and each contains on average 35 grams of silver, that's 350 million grams of silver, or approximately 11 million ounces of silver diverted just to the automotive industry. But the projection is that over the next 3 to 5 years, electric vehicle sales are going to double or triple. This means that silver demand for electric vehicles will probably go from the current 11 million ounces to perhaps 30, 40, or 50 million ounces annually in the coming years. Added to what's already needed for solar energy, you start to see where all the available silver goes. But wait, there's another factor that analysts are barely beginning to completely integrate into their models. Artificial intelligence. When you talk about artificial intelligence in 2025, we're not just talking about software or algorithms. We're talking about massive hardware infrastructure. The data centers that train and run artificial intelligence models consume enormous amounts of energy. That means they require extremely high quality copper wiring, silver contacts to ensure maximum conductivity, and sophisticated electronic components. The silicon chips that power artificial intelligence have to be of the most advanced specifications available. Next generation semiconductors require even more silver in their manufacturing processes than conventional chips. Some analysts are arguing that silver demand derived from artificial intelligence infrastructure could represent a new demand component of between 5 to 10% of total industrial silver consumption over the next 3 to 5 years. What that means is that you have 3 enormous industries, each with its own accelerated growth dynamic, each requiring significant quantities of silver, and all competing for the same limited supply. This isn't a theoretical problem. It's a problem that's already manifesting in the markets. In early 2024, there were reports of silver refineries in the West experiencing congestion in their processing lines. The waiting lines for silver ore to be refined grew longer, delivery times extended. This happened because demand for refined silver was so strong that the refineries simply couldn't process it fast enough. When you have refineries operating at maximum capacity and still can't meet demand, you understand there's a structural problem. Industrial buyers of silver, that is, solar panel manufacturers, battery producers, electronics companies, are beginning to adopt tactics that you typically see when there's a shortage of a critical input. They're buying silver forward, negotiating long-term contracts at fixed prices to ensure they'll have access to the metal they need over the next 2 or 3 years. Some are beginning to maintain larger inventories of safety stock silver, which in supply chain jargon is called safety stock. Others are increasing their investments in research and development to find ways to reduce silver content in their products. But here's where the system starts to break under its own weight. When all the industrial buyers of silver are behaving defensively, all trying to secure supply, all trying to protect themselves against the possibility of unavailability, that creates additional price pressure. Silver sellers understand there's competition among buyers. In that context, why would they sell at low prices? Now, let me give you the macro context that makes all this even more relevant. Over the last 15 years, silver prices have been under relative pressure. Silver didn't capture the narrative the way gold did. Gold was perceived as a hedge against inflation, as a monetary asset. Silver was viewed more as an industrial metal that happens to have some investment characteristics, but that mainly behaves like a commodity. This meant that during years of easy credit abundance, when investors were buying risky assets, silver remained relatively ignored. Silver prices in 2015 were falling to levels below $14 per ounce. By 2020, it was still around $18 approximately. Speculation about possible scarcity wasn't part of market discourse. The sentiment was that silver was abundant, that there was always silver available, that it would never be a problem. That sentiment of abundance allowed prices to remain relatively weak for years. But now, in 2025, reality is beginning to impact that old sentiment of abundance. The market is gradually waking up to the reality that there's a structural silver deficit. The market is beginning to recognize that the global energy transition, which everyone proclaimed to support, literally requires tons of silver that simply don't exist in ready-to-use inventories. What typically happens in these moments of awakening in precious metals commodity markets is that there's a period in which prices lag significantly behind what fundamental reality would suggest. Analysts and commentators keep repeating the old narrative even when market conditions have fundamentally changed. Investors still think of silver as a second-rate industrial metal, not as a critical asset for future infrastructure. But this typically doesn't last. When evidence of scarcity becomes irrefutable, when industrial users start reporting difficulties accessing supply, when prices start moving, the market narrative changes. And when it changes, it does so quickly. Let's look at what's happening in silver futures and options markets. A year ago, speculators had a relatively small position in silver futures. Transaction volume was moderate. Open interest, which is a measure of how many unresolved contracts exist in the market, was relatively low. But over the last 6 to 9 months, we've seen a significant increase in open interest. This suggests that market participants are starting to position themselves. They're not making massive moves yet, but they're positioning themselves slowly for what they believe might come. Silver price has risen. A few years ago, it was at $15 per ounce. By late 2024 and early 2025, it was trading between $32 and $34 per ounce. That's almost double in just a few years. To some, that seems like a dramatic move. But when you put it in context, when you understand that it's the result of years of market deficit, explosive demand growth, and supply constraints that won't disappear anytime soon, that move starts to look not like a conclusion, but like a beginning. What I'm going to do now is project forward. I'm not making a price prediction because making specific price predictions is risky and typically results in the predictor looking foolish. What I am doing is analyzing structural forces and asking, given the reality of supply, given the reality of demand, given the trends that are visible right now, what is it reasonable to expect will happen over the next 2 to 3 years? For 2026, if solar demand continues growing as projected, if electric vehicle deployment continues accelerating, if artificial intelligence infrastructure demand begins to be a material factor, then it's reasonable to expect that the silver deficit in the global market will persist. A persistent deficit in a market where supply is as inelastic as silver's typically leads to price pressure. It's not guaranteed that prices will rise dramatically tomorrow, but it's likely that there will be systematic upward pressure over the next several years. Now, there is a factor that could change this equation. If technology to reduce silver content in solar panels really takes off, if Samsung or someone else really manages to commercialize solid-state batteries that reduce silver demand, if functional substitutes for silver in semiconductors are discovered, then the equation would change. But so far, decades of research and development haven't produced viable substitutes. I don't want to discount the possibility that it could happen, but I'm also not going to build an analysis on the assumption that it will. There's a second factor that could also change things, which is supply. If new silver mines begin operating at significant scale, if silver byproduct production expands dramatically, if new recycling techniques emerge that can process electronic waste at scale, then supply could increase. But all these scenarios require time. New mines take years to develop. New recycling techniques require capital investment and commercialization. What we see in the short term, over the next 2 to 3 years, is that supply will probably grow slowly, while demand will continue growing at an accelerated pace. This brings to a third point that is extremely important. The geography of silver production and consumption is beginning to concentrate in ways that have geopolitical implications. China produces 30% of the world's silver. China also consumes a significant proportion of the world's silver in its manufacturing industry. But China is also aware of its vulnerability and access to critical resources. The Chinese government has been emphasizing the circular economy, recycling, resource conservation. It's possible that over the coming years, China will try to reduce its dependence on imported silver by developing more aggressive domestic recycling and conservation capabilities. If that happens, what does it mean for the rest of the world? It means that global silver supply could decrease because China would be consuming internally a larger proportion of its own production, leaving less for export. This is exactly the type of geopolitical reality that can amplify price pressures for the rest of the world. Now, let me direct your attention to something that I think is particularly important, but that's rarely mentioned in public discourse. Volatility in precious metals commodity markets typically increases during periods of structural transition. During quiet years when supply and demand are relatively balanced, prices tend to be stable. But when there are significant structural changes in supply or demand, when there are changes in who's buying and selling, when there's uncertainty about future supply levels, volatility typically increases. What this means for investors considering positions in silver is that you have to be prepared for significant moves in both directions. It's not enough to think that silver will go up and hold the position passively. You have to have clear risk management. You have to understand what your tolerance for volatility is. You have to have a clear strategy about how to position yourself. There are mainly 3 ways you can gain exposure to silver. One is to buy physical silver, that is, bars, coins, ingots, silver that you literally have in your possession. This is the oldest and most direct way. It's also the simplest conceptually. You have silver, you own it. If the price goes up, you gain. This form of exposure has advantages and disadvantages. The advantage is that there's no counterparty risk. Your silver doesn't depend on a bank or other institution behaving correctly. The disadvantage is that it's a bit inconvenient to buy, to store, to sell. You can't simply sell your silver with a click on your phone. You have to take it to someone who will buy it. And that process has transaction costs. The second way is through exchange-traded funds, ETFs, that hold physical silver in the fund and allow you to invest in fractions of it. The advantage is convenience. You can buy and sell through your brokerage. The disadvantage is that there are fund management costs. There's counterparty risk, though it's typically minimal. But fundamentally, you're investing in a promise that the fund has silver. not in the silver itself. The third way is through futures or derivatives, which are bets on what you think the price of silver will be in the future. These offer leverage, which means you can gain exposure to large moves with a small amount of capital. But leverage also works in reverse. You can lose more money than you initially invested. For most individual investors, the typical mix would be a combination of physical silver for certainty and ETFs for convenience and liquidity. The specific amount depends on your risk tolerance and your investment objectives. Now, let's return to the central question. Why is all this happening now? Why is silver demand exploding right at this historical moment? The answer is that the convergence of several trends has reached a breaking point simultaneously. First, the global energy transition has moved from being a political objective to being an economic reality. It's not enough for governments to say they want clean energy. Now there's real economics behind it. Solar panel costs have fallen so dramatically that many solar energy projects are economically competitive even without subsidies. That means solar panel demand is being driven not just by subsidy policies, but by rational market economic decisions. Second, electric vehicles are finally reaching a critical mass point. Automobile manufacturers are investing billions in electric vehicle factories. Governments are restricting the sale of internal combustion vehicles. Consumers finally have attractive electric vehicle options. This means that electric vehicle sales numbers will explode over the coming years. Third, artificial intelligence infrastructure is generating completely new demand for high-end electronic components. 10 years ago, nobody was talking about building massive data centers to train neural networks. Now that's a multi-billion-dollar industrial bet in every developed country. The convergence of these three trends has created a silver demand that is simply unprecedented. And the supply, as we've discussed, cannot respond with sufficient speed. But there's a final aspect that I want you to understand. This situation isn't unsustainable indefinitely. At some point, silver prices will rise enough to discourage consumption or to incentivize innovation in conservation or substitution. Solar panel manufacturers will work harder at reducing silver content. Battery producers will discover ways to use less silver. New mines will begin developing when silver prices are high enough to justify the investment. The market will find equilibrium. But the journey from here to that equilibrium, which could be a decade, is what represents the opportunity. During this market adjustment period, during these years when supply and demand aren't in equilibrium, during these years when industrialists are struggling to access silver supply, interesting things happen. Prices move. Volatility is generated. People who understood the situation early gain. People who realize it late lose. So what's the conclusion of all this? The conclusion is that silver isn't just a pretty metal with investment properties. It's a critical industrial input whose demand is on a trajectory of accelerated growth for the coming years. Supply is limited and will be slow to respond. The market has recognized this slowly and is beginning to reprice the asset, but there's probably still room for prices to rise significantly over the next 2 to 3 years. For those who understand this reality, there's an opportunity, not an opportunity to get rich quick. That's pure speculation, but an opportunity to position yourself in an asset whose fundamentals are improving, whose demand is growing, whose scarcity will intensify. That type of positioning, if done in a disciplined way and with appropriate risk management, typically rewards those who are patient and who have conviction in their analysis. The silver that will be in your solar panel, in your electric vehicle, in your communications infrastructure, that silver has to come from somewhere. Someone has to extract it, refine it, transport it, sell it. That process creates investment opportunities. The question is whether you're positioned to capture that opportunity or whether you're going to remain on the sidelines waiting for things to change, only to realize too late that the window already closed. The silver market is at a crossroads. Fundamental forces are aligned for significant revaluation. The global energy transition is real. Industrial demand is real. Scarcity is real. What's missing is for the global investment market to fully realize this. When it does, when the market narrative finally aligns with the reality of supply and demand conditions, that's when you'll see significant moves. This is an analysis of how the world's energy system is really organized in 2025, of how technology is transforming our energy consumption system, and of how the metals that make that transformation possible are assets that deserve your attention. Silver isn't a noisy asset that appears in headlines every day, but that silence is precisely what makes it so interesting. Because when the market finally realizes, when the reality of scarcity finally becomes impossible to ignore, that's when the most dramatic changes happen. Always remember that the best time to position yourself in something is when nobody else is talking about it, when it seems boring, when it seems like nothing is happening. Because by the time everyone is talking about it, by the time it appears in major headlines, by the time it's obvious, it will already be too late to capture the main move. Silver is showing you all the signals right now. The signals are in market data. The signals are in the behavior of industrial buyers. The signals are in the geography of production and consumption. The signals are in the market deficits that are materializing year after year. The question is whether you're going to pay attention to those signals, whether you're going to do your own research, whether you're going to build your own understanding of why silver is important. Because the truth is that the energy revolution we're living through, the transformation toward clean energy, toward electric vehicles, toward artificial intelligence and advanced computing, all of that depends on a metal that typically receives very little recognition. Silver is the unrecognized metal of the energy transition. It's critical, it's irreplaceable, it's being used in unprecedented quantities, and there's a shortage. Over the next years, as the market realizes this, as prices begin to reflect the reality of market conditions, those who understood early will have made the right position. Not because they guessed the future perfectly, but because they based their decisions on an honest analysis of the structural forces at play. That's the lesson here. It's not about guessing. It's about understanding how the world really works, about seeing the forces that are in motion, about recognizing when reality is diverging from what the market believes, and about positioning yourself accordingly. Silver is a textbook case where that's happening right now in 2025. The forces are in motion. The numbers are telling the story. The question now is what you're going to do with that information